What is happening, crypto enthusiasts? Welcome back to Bitcoin Bulletin, where we bring you the pulse of the digital asset world with lightning speed. The market is on fire, the news cycle is relentless, and if you're not plugged in, you're missing out. Today, we've got a massive security alert that's shaking the foundations, and we're starting with a staggering $91 million heist that's exposing some serious security weaknesses across the board. This isn't just a number. It's a wake-up call for everyone in the space. Next up, we're diving headfirst into the epic showdown that has everyone talking: Ethereum versus Bitcoin. With Bitcoin hitting incredible highs and Ethereum making massive moves, analysts are locked in a fierce debate about who will lead the next charge. We've got the whale activity, the price predictions, and the insider takes that will tell you everything you need to know about this pivotal moment. But the action doesn't stop there. We're pulling back the curtain on the Bitcoin network itself, revealing that beneath the surface of apparent stability, on-chain activity is dropping, putting unprecedented pressure on the network's core economy. What does this mean for miners, for security, and for the future of Bitcoin? We've got the critical details you need to understand. And finally, get ready for a jaw-dropping acquisition that's changing the game. A major player has just surpassed a massive milestone, acquiring a colossal amount of Bitcoin and solidifying its position as a dominant force. This move has massive implications for the market. Stick around for all these stories and more. Don't forget to smash that like button, subscribe if you haven't already, and ring that notification bell so you never miss an update. Massive security breach uncovered. In a concerning development for the digital asset space, August 2025 saw a dramatic surge in cryptocurrency hacks, with losses escalating to an estimated $163 million across 16 major incidents. This represents a significant 15% increase from the previous month, highlighting a worrying trend of escalating cyber threats. The data, meticulously tracked by PeckShield Alert, paints a stark picture of the vulnerabilities that persist within the crypto ecosystem, impacting both individuals and major platforms alike. At the heart of this alarming trend was a single, staggering incident where a Bitcoin holder was defrauded of an immense $91.4 million. While this particular loss wasn't directly linked to a centralized exchange or a specific project, it serves as a powerful and sobering reminder that even substantial private holdings are not immune to sophisticated attacks. The sheer scale of this individual loss underscores the critical importance of robust personal security measures, a message that resonates loudly with long-term investors who might otherwise feel insulated. Adding to the mounting concerns, the Turkish cryptocurrency exchange BTC Turk found itself in the spotlight once again, reporting a substantial loss of $54 million in August. This unfortunate event marks the second major security breach for the exchange within a mere 14-month period, following a similar $54 million theft in June 2024. With cumulative losses now soaring past the $100 million mark, BTC Turk is facing intense scrutiny regarding its security protocols and its ability to regain the trust of its user base after repeated, significant compromises. The ripple effect of these attacks extended to decentralized finance, DeFi platforms, and smaller exchanges, with notable victims including the Odin Fund project, which reported a loss of $7 million. Additionally, BetterBank.io and CreditX Finance each suffered losses amounting to $5 million and $4.5 million, respectively. This diverse range of targets illustrates the pervasive nature of the threats, as hackers are adept at exploiting weaknesses across both centralized and decentralized infrastructures, leaving no segment of the crypto industry untouched. In response to this escalating crisis, industry analysts are strongly advocating for the immediate implementation of enhanced security measures. While the sector has seen increased investment in cybersecurity, the ingenuity of attackers in uncovering exploitable flaws in smart contracts, wallet systems, and platform defenses remains a significant challenge. The reputational and financial repercussions of these breaches are often severe, leading to user attrition and heightened regulatory oversight. As these losses continue to mount, investor confidence is likely to face persistent pressure, potentially hindering the broader adoption of digital assets. Security firms like PeckShield emphasize the necessity of proactive steps for all users, both individual and institutional. Recommendations include the exclusive use of hardware wallets for safeguarding significant assets, the mandatory activation of two-factor authentication, and diligent software updates to patch any known vulnerabilities. Furthermore, platforms are urged to prioritize regular, independent security audits, robust bug bounty programs, and sophisticated real-time monitoring systems to effectively counter the constantly evolving threat landscape. Without such comprehensive measures, the current trend of increasing losses poses a significant risk to the integrity and credibility of the entire crypto market. But what does this mean for the future of crypto security? Next, we're diving into the epic battle for dominance between Bitcoin and Ethereum, with analysts debating who will seize the crown. Bitcoin versus Ethereum, the ultimate showdown. As the cryptocurrency market continues its dynamic ascent, the age-old debate reignites. Who will emerge as the dominant leader, Bitcoin or Ethereum? With Bitcoin currently trading above a remarkable $111,000 and Ethereum making impressive strides towards $4,950, both digital assets are experiencing significant activity from major whale investors. This renewed focus on these two titans is also drawing attention to strategic altcoin plays, with emerging projects like MAGACOIN Finance being highlighted for their built-in safety features and transparent operations. Bitcoin's impressive surge past the $111,000 mark has been significantly bolstered by consistent buying pressure from both whales and institutional investors. On-chain data reveals a notable increase in wallets holding substantial amounts of Bitcoin, with those possessing 1,000 or more BTC climbing from 1,392 to 1,417 within a single week, a new high for the year. This trend was further emphasized by a massive single whale purchase of 2,400 BTC, valued at approximately $200 million, underscoring the conviction of major holders. Adding to this momentum, the prominent business intelligence firm MicroStrategy has continued its aggressive accumulation strategy, acquiring an additional 6,911 BTC worth around $623 million in a matter of days. Since March, the collective accumulation by Bitcoin whales has been substantial, with an estimated 129,000 BTC added to their holdings. This includes a historic single-day inflow of 48,575 BTC, valued at roughly $3.6 billion, recorded on April 9th, the largest daily influx observed since February 2022. This buying wave is not solely driven by long-term, established holders. New whale wallets are also entering the market, signaling a fresh wave of institutional interest and capital deployment. Price forecasts from reputable financial institutions remain overwhelmingly bullish. Standard Chartered has projected Bitcoin to reach $120,000 by the second quarter of 2025, with potential to hit $200,000 by the end of the year. Industry heavyweights like Van Eck and H.C. Wainwright have set even more ambitious targets, envisioning Bitcoin reaching $225,000 in 2025, while global X ETFs anticipate it hitting the $200,000 mark within the next 12 months. Looking further ahead, ARK Invest has presented a long-term outlook of $1.2 million per Bitcoin by 2030, with a more optimistic bull case scenario reaching $2.4 million. The confluence of factors, including the increasing adoption of Bitcoin, exchange-traded funds, ETFs, evolving macroeconomic policies, and the persistent narrative surrounding the upcoming halving events, all suggest that Bitcoin's trajectory is increasingly aligning with broader institutional-grade adoption and acceptance. Meanwhile, Ethereum has charted its own impressive upward trajectory, recently touching the $4,950 mark. Data concerning mega-whale wallets, those holding 10,000 ETH or more, indicates a significant increase in their holdings, which have grown from 37.6 million ETH last October to a current total of 41 million ETH, marking a robust 9.3% increase. On June 15th alone, these mega-whales collectively acquired 818,410 ETH, approximately $2.5 billion, representing the largest single-day inflow recorded for Ethereum since 2018. Beyond the mega-whales, smaller whale and shark wallets, typically holding between 1,000 and 100,000 ETH, have also been actively accumulating, adding approximately 1.49 million ETH, valued at around $3.8 billion, over the past month. Collectively, these significant holders now control about 27% of Ethereum's total circulating supply. Furthermore, the top 104 wallets, each holding over 100,000 ETH, now command an impressive 57% of the total supply, a new all-time high. A key differentiator in this cycle is that Ethereum whales have demonstrated remarkable conviction, avoiding mass outflows even amidst periods of geopolitical volatility. This resilience signals a strong belief in Ethereum's long-term value proposition, thereby bolstering confidence across the wider market. Forecasts for Ethereum's future price are varied but generally lean optimistic. Prominent analyst Tom Lee of Fundstrat has predicted ETH could reach anywhere from $10,000 to $15,000 by the end of the year, while other market observers anticipate peaks between $15,000 and $20,000 if bullish market conditions persist. More conservative estimates place Ethereum's value between $6,000 and $8,000 by the fourth quarter of 2025. Across these diverse predictions, a common consensus emerges. Analysts widely expect Ethereum to break into the coveted five-figure price territory. For traders seeking opportunities beyond the established giants, projects like Metaplanet Finance are being presented as strategic entry points. Positioned as an alternative to purely meme-driven assets, it aims to combine practical utility with a strong emphasis on security. The project boasts features such as independent security audits, anti-scam protocols, and transparent operational frameworks, all designed to safeguard users while maintaining accessibility within its ecosystem. This combination of demonstrable utility, operational transparency, and user protection makes Metaplanet Finance a noteworthy option for those looking to diversify their portfolios beyond the dominant Bitcoin and Ethereum narratives. While Bitcoin and Ethereum continue to capture the spotlight with strong whale and institutional backing, the market is always evolving. Now, let's shift our focus to the internal health of the Bitcoin network itself, where activity is showing a significant downturn. What does this mean for its future? Bitcoin network under pressure as activity drops. Beneath the surface of Bitcoin's seemingly stable price, a critical internal dynamic is shifting, potentially threatening the long-term sustainability of the network's economic model. Since the pivotal April 2024 halving event, transaction fees have plummeted by over 80%, directly impacting the remuneration structure for mining companies. This downturn in fees, occurring in the wake of the halving and increased ETF interest, signals a faltering internal economy for Bitcoin, raising serious questions about network security incentives and the future viability of mining operations. The April 2024 having drastically reduced the block reward for miners from 6.25 BTC to 3.125 BTC. In theory, to maintain network security and profitability, transaction fees were expected to compensate for this reduced block subsidy. However, this crucial mechanism is currently experiencing a sharp decline. According to a recent report by Galaxy Digital, transaction fees have fallen by more than 80% since the halving, posing a direct threat to the financial stability of mining operations, which are essential for validating transactions and securing the blockchain. This combination of a significantly reduced block reward, a collapse in transaction fees, a general downturn in on-chain activity, and a potential migration of users and capital to alternative platforms is collectively exerting unprecedented pressure on Bitcoin's internal economy. The core question facing the ecosystem is whether mining companies will continue to find it economically viable to secure the network under these conditions in the long term. A sustained decline in mining profitability could lead to a reduction in the network's hash rate, potentially making it more vulnerable to attacks. In response to this pressing fee crisis, a growing segment of the community sees the burgeoning field of BTCFI, Bitcoin-native decentralized finance, as a potential solution. Unlike DeFi ecosystems on platforms like Ethereum or Solana, which often rely on internal smart contract functionalities, BTCFI aims to leverage Bitcoin directly as the underlying asset for financial activities. This approach necessitates the movement of Bitcoin for every transaction, which in turn consumes block space and generates fees. Pierce Amides, operations director at the Dfinity Foundation, emphasizes this point. Every BTCFI action requires moving Bitcoins. This movement triggers computations and requires secure block space, and block space, by its nature, has a cost. Consequently, the increased adoption and usage of BTCFI applications could directly lead to higher transaction fees generated on the Bitcoin network, potentially revitalizing the miner remuneration model. Julian Mesger, marketing director at Liquidium, further highlights the profound evolution of Bitcoin's infrastructure over the past 5 years. He believes that Bitcoin has transformed from a simple settlement protocol into a complex, multi-layered ecosystem. This evolution is laying the groundwork for a native Bitcoin DeFi environment capable of supporting a wide range of financial activities, including lending, decentralized exchanges, and yield generation, all while simultaneously boosting on-chain activity and, crucially, transaction fees. If this developmental trajectory continues, Bitcoin could transcend its traditional perception as merely digital gold and evolve into a foundational financial infrastructure. It could become an essential, programmable building block for decentralized financial systems, thereby creating a more robust and sustainable economic model for the network. This internal economic pressure on Bitcoin is a significant development to watch. Now, for some truly massive news on the acquisition front, a major player has just doubled down, acquiring a colossal amount of Bitcoin and reshaping the landscape. Metaplanet surpasses 20,000 BTC milestone with massive acquisition. In a significant move that solidifies its position as a major global holder of digital assets, Japan-based Metaplanet has announced the acquisition of an additional 1,009 Bitcoin. This strategic purchase, valued at approximately $112 million, $16.48 billion Japanese yen, brings the company's total Bitcoin holdings to an impressive 20,000 BTC. This substantial accumulation elevates Metaplanet to 6th place among public companies holding Bitcoin reserves, surpassing prominent players like Riot Platforms, according to recent industry data. The company disclosed that this latest batch of Bitcoin was acquired at an average price of $111,068 per coin. This significant investment comes less than 3 months after Metaplanet first reported reaching the 10,000 BTC holding milestone, demonstrating an exceptionally aggressive expansion strategy. Earlier this year, the firm had already revised its year-end target upwards from 10,000 BTC to an ambitious 30,000 BTC, signaling a clear intent to become one of the largest corporate holders of the digital asset. Metaplanet's aggressive accumulation strategy is further supported by its recent financial maneuvers. Last week, the company revealed plans to raise approximately 130 billion yen, roughly $880 million, through an international share offering. The majority of the capital raised from this offering is specifically earmarked for further Bitcoin acquisitions over the next 2 months, indicating a sustained commitment to expanding its digital treasury. Furthermore, Metaplanet's CEO, Simon Jurovich, has previously articulated a forward-thinking strategy that involves leveraging its substantial Bitcoin holdings. He has indicated that the company may utilize its Bitcoin reserves as collateral to secure loans. These borrowed funds could then be deployed to acquire cash-generating businesses in the future, creating a synergistic model where digital assets support traditional revenue-generating ventures. This approach highlights a sophisticated understanding of how to integrate cryptocurrency into broader corporate financial strategies. Following the announcement of this major acquisition, Metaplanet stock experienced a slight dip, declining by 2.62% during Monday morning trading in Japan. However, its US-listed shares had closed the previous Friday with a modest gain of 0.83%, settling at $6.11. These market reactions illustrate the dynamic interplay between corporate announcements, investor sentiment, and the broader cryptocurrency market fluctuations. Meanwhile, the price of Bitcoin itself saw a minor correction in the past 24 hours, dropping by 1.53% to trade around $107,605. This slight pullback occurred amidst broader market movements, but did not overshadow Metaplanet's significant achievement in expanding its Bitcoin treasury. This major corporate acquisition is a clear signal of growing institutional confidence in Bitcoin. Now, let's wrap up all the top stories with a quick recap and a final call to action. And that's a wrap on today's essential crypto updates. We saw a massive $91 million heist exposing security flaws, debated the leading position between Bitcoin and Ethereum with major whale activity, uncovered concerning drops in Bitcoin network activity impacting miner economics, and celebrated Metaplanet's huge 20,000 BTC acquisition. Don't miss out on any future developments. Make sure you're subscribed, hit that notification bell, like this video if you found it valuable, and let us know your thoughts in the comments below. For more insights and real-time updates, follow us on all our social media channels. Stay informed, stay ahead, and we'll see you in the next episode.